So hey guys, welcome back to EM and SMC Trader. So today I will be explaining the price action of yesterday's New York PM session entries. I took one precised entry, accurate precised entry, where I got nearly about 42 handle profit. So I will be explaining the entry, how I took the precised entry. So let's get started. Okay, as here we can see, this is the New York AM session. This is the New York AM session. So here we can see this is the buy side liquidity. Let me mark the buy side liquidity. So here this is the buy side liquidity. Okay, so this high, and this high, they are the relatively equal highs. So they are the extreme buy side liquidity over here. We also have the extreme buy side liquidity over here, but this is the most obvious buy side liquidity here. So here we can see market has taken this buy side liquidity. This buy side liquidity is taken by this run. So this specific run, wait, let me mark this run. This run has taken the buy side liquidity, then went higher. So here we can't see any sort of sell side liquidity over here. All the sell side liquidity has been taken by this run, and here we can see, but this is the extreme sell side liquidity. Market will be taking this sell side liquidity, but not now. So here we can see this is the buy side liquidity which has been taken by this run. In this run, this is the highest fair value gap. So here these three lines are the new week opening gap. So here we can see market simply traded the inversion fair value gap, and the body has been closed above the 50% of this new week opening gap. So after that, market simply again came here, then traded the 50% of this inversion fair value gap. The body has been closed below the 50% of this new week opening gap, but the very next candle has closed above the 50% of this new week opening gap. So we didn't take the entry from here. We take the entry from here. So let's explain how I took the entry from here to this. This run, I took this run. This run, and this run is after 3:45 p.m. And I don't trade after 3:45 p.m. So this was the last run, and this was the last trade on the New York PM session. So now let's go to 1 minute chart. So here, as we can see, this is the 15 minutes inversion fair value gap. This is the 15 minutes inversion fair value gap, but we won't count this as an inversion fair value gap because the 15 minutes candle didn't close below the inversion fair value gap. So we will count this as an entry fair value gap, as we have another fair value gap over here as we showed in the 15 minutes chart. So that was the last fair value gap, and this is the entry fair value gap. So here let me mark this as the entry fair value gap. Now here we can see this is the backtested entry. We didn't take the entry in the live. Yesterday I showed in the live and explained the whole price action in the live, but I am making another specific video as this is a precised entry. So this was the buy side liquidity. See how extreme buy side liquidity is this. And this is the sell side liquidity over here. So here we can see this specific run has taken the sell side liquidity. This is the fair value gap, which is known as valid inversion fair value gap. This is the perfect inversion fair value gap. This is the market structure shift. Market structure has been shifted. After that, market simply traded the 50% of this new the inversion fair value gap and went until this buy side liquidity. If you see, the buy side liquidity has been taken by a shallow run. But as this is a shallow run, we would like to say that the buy side liquidity has not been taken. So here we can see, you can say that this is a breakout, as the 1 minute candle has, the body has been closed below the 50% of this inversion fair value gap. But see, this is a fake breakout. See this candle body has been closed below the 50%, and the very next candle body has been closed above the fair value gap. So I consider this as a fake breakout, and of course your stop loss should be below this. So I didn't take this entry, but I simply explained. By the way, I take this entry I took in the live. You can check our live, yesterday's live. So here we can see market has taken this low, this swing low, So they are also kind of liquidity. Okay, so market taken all the liquidity, all the sell side liquidity. Okay, the only thing we have is the buy side liquidity. Market has done his sell side liquidity's job. Okay, now as we can see, market simply, we can see this is the strongest fair value gap, as this is the new week opening gap. Okay, this is the new week opening gap, this is the 50% of this new week opening gap. Market simply came here, traded the 50% of this new week opening gap and traded until this last fair value gap. Okay, so after that market again came here for trading the entry fair value gap. Okay, so let me mark this as a, wait, as here we can see the market has taken all the sell side liquidity. So I always say that never put your target profit on the extreme buy side liquidity. Okay, market can came until the buy side liquidity and simply reverse for making the buy side liquidity much more stronger. Okay, so here the same thing happened. See, market made this extreme buy side liquidity. Okay, this is the extreme buy side liquidity. Market can come, market can come to the nearest point of this buy side liquidity and can reverse for making this buy side liquidity much more stronger. Okay, the same thing happened here. So I always prefer you to put your partial over some kind of, what to say, some kind of entry fair value gap and put your target profit until the last fair value gap. So the same thing happened over here, but whenever I, like, the first partial has been heated, I simply put my stop loss to the break even. Okay, so I, when the first partial was hit, I put my stop loss to the break even, so I got the profit. So see, this is the last fair value gap of this whole run. Okay, this is the last fair value gap. Okay, so market just reached until here. Okay, now let me explain how I took this entry, in which base. So here, as we can see, this is the most precise entry, cause see, from almost from 116, okay, 116, this entry setup was being created. So we got the entry after 2 hours. Okay, this is the precise valid entry. Okay, so here we can see their market created two gaps. Here you can see market created two gaps. Okay, so in this cases you don't need for, like, you don't need a market structure shift, as we can see the new week opening gap is here, the entry fair value gap is here, and market has taken all the sell side liquidity. So why market should go more deeper for trading this? Fair value gaps are not like magnets. Okay, but if you say about the liquidity, liquidities are always like magnets, these attract the prices. So all the sell side liquidities has been taken, so why the market will go bearish? Okay, the market should go bullish for taking this buy side liquidity, as this buy side liquidity is working as a magnet and attracting the price to come here. Okay, so here as we can see, market created a entry fair value gap and this is the last fair value gap. Okay, so here we can see market simply, I took the entry from the upper quartile of this new week opening gap. Okay, this is the upper quartile of this new week opening gap. So simply I taken this entry from here, but I would recommend you guys to take the entry from the entry fair value gap and put your stop loss below the last fair value gap, and I put the stop loss below the last fair value gap also. Here can you see a volume imbalance over here? So I put my stop loss below the volume imbalance. Okay, so always try to put your stop loss below the last fair value gap, because last fair value gap will be traded, but if it's not traded, that's way much better, but it can be traded. Okay, so here we can see this is nearly about 15 handle stop loss, and this is 32 handle target profit. So here we can see the market traded this entry fair value gap one time. Okay, then market made some buy side liquidity and sell side liquidity over here also. Okay, can you guys see market like invited the buyers and sellers over here, but market was always taking the buy side liquidity, not taking the sell side liquidity. So if market wants to go higher, okay, if market wants to go higher, the market shouldn't keep this sort of sell side liquidities empty. Market will take this sort of sell side liquidities and market will move forward. Okay, so I was expecting a big run before 3:45 p.m. local time, New York local time, but I want to see the market will take this sell side liquidity. Okay, I want to see the market will take the sell side liquidity. And again, as you can see, market tapped to this last fair value gap over here and again came back to this. Why? Market came here to take this low and this low. They are the sell side liquidity. So after taking this low, also this low, market take this buy side liquidity, traded this order block, and this was the end of day. But after 3:45 I don't trade. Okay, so here as we can see the market, let me delete this. Okay, so here as we can see market created the sell side liquidity over here. Okay, market created the sell side liquidity. The market was always taking the buy side liquidity and keeping the sell side liquidity, like inviting the buyers over here. Okay, then see market simply taken the sell side liquidity, and this is the order block. Okay, if you see this candle was holding the price. Okay, this candle was holding the price, so I consider this as an order block, the perfect order block, and this is the 50% of this order block, which is named as a mean threshold. Okay, this is the order block mean threshold. So as we can see, wait, let me mark this as a like orange color. Okay, no, red color. Okay, so here we can see this is the mean threshold, okay, of this order block. So the rule is market owned the body. Okay, the candle body shouldn't be closed below the mean threshold level. Okay, so here we can see the market simply taken the sell side liquidity, traded the entry fair value gap. Okay, market traded the entry fair value gap, also the new week opening gap one more time, and taken all the sell side liquidity. Then see when this candle has traded this entry fair value gap, the body at the end, the body has been closed above the mean threshold. So this has boosted my confidence. Okay, as the body has been closed above the mean threshold level, also the sell side liquidities has been taken. Now I want to see a displacement like this. Okay, so as we can see market simply given us the displacement. See 1 2 3 4 5 6 7 8 9 candle. Okay, within 9 candle market has given us the target. Okay, market hitted our target. So that's what a precise entry looks like. So this was our one and only entry on the New York PM session yesterday, and yesterday I didn't trade on the New York AM session, so for some sort of works. And yesterday on the New York PM session I come to live, so today also I will try to come on the live on the AM session plus PM session. So hope you guys learned something from this video, and I will suggest you guys to come on the live, because on the live I always says everything. Okay, I show everything, I show the precise entries, I explain all the price action on the live. So hope you guys will be learning something from this channel. Give it a thumbs up and subscribe to this channel. See you later. Happy trading.